If you're in the market for a mortgage, whether you're a first-time buyer and it's all new to you, or you're already a homeowner and looking to remortgage, you'll want to get the best mortgage deal. Now, there are some tricks to this, as the top mortgage offer isn't always the one with the best rate. There are other things you need to consider, such as different types of fees that could push up the cost of your mortgage and actually make it more expensive than one with a higher interest rate. So I'm going to take you through some important steps you can take to make sure you find the cheapest mortgage you can, and I'll also show you one of our handy new tools that can help you get started. Now, the first thing to do is to give yourself a bit of time to compare the best mortgage deals. Now, this can be tricky to do for a couple of reasons. Firstly, mortgage rates change all the time, so the rate you're given one day could be pulled the next. And secondly, the rates you're offered will depend on your individual circumstances. This will include the size of your deposit, your credit history, and how much you want to borrow. You can see generic rates on bank websites and written about in the press, but these are usually based on average figures, so they're not really much use. And while you might be tempted to just get a mortgage from your bank for ease, it's not always the best idea. You might be with a bank that has a limited range of mortgages that could be more expensive than other lenders, or they might not be quite right for your circumstances. So while it might be easier to just go with the lender you know, you could end up paying a lot more in the long run. Now, don't worry if you don't know where to start. We've recently introduced a couple of really handy tools as part of our partnership with mortgage broker Tembo, including mortgage comparison tables to help make getting a mortgage easier and more affordable. You can start by heading to the mortgage page on becleverwithyourcash.com/mortgages and clicking Find Today's Top Mortgage Rates in the box at the top. You'll then be taken to our tool where you'll enter a few details before being shown the best rates. Now, the first thing you need to select is whether you're making a purchase or you're remortgaging. The purchase option is for someone like a first-time buyer who's getting a brand new mortgage. If you're remortgaging, as the name suggests, you've already got a mortgage which could be coming to an end and you're looking for a new deal, either with the same provider or a different one. Now, the next bit of information you need to enter is the mortgage type. So whether you're looking at getting a residential mortgage for the home you live in or a buy-to-let mortgage for a home you rent out. And finally, if you're making a property purchase and you're after a residential mortgage, you'll need to put in the property value of the home you're buying and the size of your deposit. This will give you the LTV, or the loan to value ratio, which is a really important thing for lenders to consider when offering borrowers mortgages and will impact the rate you can get. If it's a remortgage, you'll input slightly different information, the property value and the amount remaining on your current mortgage. But for the sake of this example, let's look at a purchase of a residential property. And let's say the home you wanted to buy is £250,000 and you've got a £25,000 deposit. As that's a 10% deposit, it will give you an LTV of 90%. Now, if you're not sure what LTV is, we've done a full article and video on this, which you can find on becleverwithyourcash.com. But essentially, it's how much you've borrowed against the value of your house. It's really important when it comes to mortgages and remortgages, as it can have a significant impact on what deals you can get and the rates you're offered. Generally speaking, the lower the LTV, the lower the interest rate. That's the general rule until you get to 60% LTV, and after this level, deals are likely not to get any cheaper. With our example, if you had a deposit of £30,000, you'll have an LTV of 88%, and a deposit of £50,000 will give you an LTV of 80%. But let's go back to the £25,000 deposit and the 90% LTV. Click Search Mortgages and you'll be shown the top deals sorted by the lowest monthly cost. This is based on a repayment mortgage, so you'll be paying off both the interest and the capital over 35 years, fixed for 5 years. Now, if you go to Filter Deals, you'll be able to change your options. You can change the repayment type from repayment to interest only if you need to, as well as the rate type. With this category, you can pick from fixed, discount, which is where you get a discounted variable rate that's set below the lender's standard variable rate for a certain period of time, and tracker, which tracks the Bank of England rate. You can also change the mortgage term from the default 35 years to something else, and the deal period from 5 years to 2, 3, or 10 years. Another thing you can do is look for deals from a specific lender, but we'll leave that section blank for now as we want to compare others on the market. So if we stick to the default options for now, the top 3 offers include HSBC with a 4.19% deal, followed by Nationwide and NatWest offering slightly higher rates of 4.25% and 4.26% respectively. With all the options, you'll be shown the estimated monthly cost, which is really useful, the interest rate, and the cost over the term of the mortgage, which here is 5 years. In this case, you'll pay around £1,021 a month with HSBC, £1,030 with Nationwide, and £1,032 with NatWest. You can then click the arrow for more information, and you can also check your eligibility. If you click that button, you'll be taken to Tembo's website and asked for more information so they can create a personalised plan for you. But let's try another example. So if we shorten the term to 25 years with a 5-year fix, the top interest rates stay the same, but the monthly cost shoots up to £1,210 with HSBC, £1,290 with Nationwide, and £1,220 with NatWest. One way to lower what you'll pay each month is to extend the overall length of your mortgage, so say from 30 to 35 years, and you can play around with how that will impact the deals you'll see in our table. Of course, that does mean you'll be paying more interest over the entire duration, but if this or later deals allow you to overpay, you have the flexibility to reduce the term if you have more spare cash. Now, I've got to tell you that when you're using these tables, the results that are kicked out are only an estimate, and things could change by the time you come to apply. Now you've got an idea of what deals are out there, you'll need to get a more accurate projection for your exact circumstances. Just because you've seen a deal, it doesn't mean you'll get it. So you can go directly to the bank, or to get a wider range of options, you might want to speak to a mortgage broker. A good mortgage broker will have knowledge of different lenders' criteria and will be able to give you a steer as to which mortgage you're likely to be accepted for. They can also help you make a decision on what type of mortgage is best for you based on your circumstances. What you want to be looking for in a broker is one that compares the whole of the market or has a broad range of options. You'll also want to check if it charges any fees. So most brokers take commission from the lender once a mortgage is finalised, and it's usually around 0.35% of your loan, but it won't impact how much you pay. Lenders have to tell you what they'll be paid before you apply, and you can also find it in the paperwork you're sent, known as the key facts illustration, before you make your application. But some lenders also charge customers a fee, or it could be instead of the commission. If they do charge a fee, it shouldn't be more than around 1% of the mortgage. You should be told about the fees from the start, but they can be charged at any point in the process. If you're using a broker who does charge, ideally you want to pay as far along the house buying process as possible. That way, if the sale falls through, you're not out of pocket. Some brokers charge on completion, which means you'll only pay when the sale goes through. You'll also want to make sure you're speaking to a qualified mortgage broker and the firm is regulated by the Financial Conduct Authority. That means if something goes wrong, maybe you get incorrect advice, you could take your complaint to the Financial Ombudsman Service. Now, there are plenty of good mortgage brokers out there, but we've partnered with Tembo, so you can get their advice for free. Just click through from our tables to start that process, and if it's a standard mortgage, Tembo will waive the usual fee, saving you up to £499. Now, our tables compare over 20,000 mortgages from over 100 lenders, but not all mortgage providers work with brokers. So if you want to be really thorough, your next step is to check deals directly with these lenders to see if you can beat the rates you've been shown on the tables. There aren't that many, so it shouldn't take too long, but they include First Direct, Lloyds Bank, RBS, Yorkshire Bank, and Yorkshire Building Society. If you've not used our comparison table, but you might have used another one elsewhere, you also might want to compare the deals you found online with the ones your brokers suggested. Now, if you're remortgaging, you can take these steps to lock in a rate before your deal comes to an end. It's best to start looking for a new deal around 6 months before your current mortgage ends, and this is to give yourself enough time to sort out a new deal and avoid that dreaded SVR. Most banks and building societies will also let you secure a new deal 3 to 6 months before you actually need it. Then if rates fall in the meantime, you don't need to go ahead with it and you've still got time to apply for a new deal. However, do check the small print to find out if you need to pay the fees in advance, as you might not get them refunded if you don't go through with it. Now, to finish off, I will just mention, if you remortgage through our partner Tembo up to 6 months before your current deal ends and rates drop in that time, you can ask your mortgage broker to reapply for you at no extra cost as part of their free rate checking service. And that's it. Thanks so much for watching. Check out these videos here for more ways to make the most of your money.